Today's financial market update. The most important market insights and investment ideas you need to know. Market sentiment is bearish. Market is declining across major indices. Index performance: S&P 500 at -0.57%, Dow Jones at -0.23%, NASDAQ at 0.59%, Russell 2000 at 0.33%. The overall stock market sentiment remains bullish, supported by strong economic indicators and rising consumer confidence. A bullish market sentiment suggests that investors are optimistic about future growth, indicating a potential upward trend in stock prices. Consider investing in renewable energy companies, as the bullish sentiment is likely to drive growth in this sector. Households earning $160,000 or more are increasingly feeling the impact of rising inflation on their finances. The financial strain felt by high-income households suggests that inflation affects consumer spending, which could slow economic growth and impact corporate earnings. Investors should consider diversifying their portfolios to mitigate risks associated with inflation and potential market downturns. Abacus Global Management reported a remarkable 116% increase in Q4 2025 revenue, with their full-year revenue doubling. The dramatic revenue growth at Abacus highlights strong demand and effective management, signaling a potential investment opportunity for growth-focused investors. Investors should look into Abacus Global Management as a strong candidate for growth investment, given its impressive revenue performance. The S&P 500 has entered a 3-week losing streak, marking its first such decline in a year. The S&P 500's decline suggests that investors are increasingly concerned about consumer confidence, which could lead to further market volatility. Consider investing in defensive stocks, which typically perform well during market downturns and may provide stability amidst volatility. The effective federal funds rate has decreased from 4.33% to 3.64% as of February 2026, indicating a significant monetary policy shift. The reduction in the federal funds rate suggests that the Fed is prioritizing economic growth, signaling a potentially bullish market outlook. Consider allocating more capital to growth-oriented stocks, particularly in sectors like technology and consumer discretionary, which typically benefit from lower rates. Britain's economy unexpectedly stalled at the beginning of the year, raising concerns about future growth prospects. The economic stall in Britain suggests a potential slowdown in consumer spending and business investment, triggering a cautious approach among investors. Consider diversifying portfolios to include defensive stocks that historically perform well during economic slowdowns, particularly in the UK market. Oil prices have surged significantly, currently hovering around $150 a barrel, driven by escalating conflicts in the Middle East. The rise in oil prices signals increasing inflationary pressures, which could lead to higher consumer costs and reduced spending power. Consider diversifying your portfolio by investing in energy stocks, as they may benefit from sustained high oil prices in the near term. The S&P 500 is on track for its first 3-week losing streak in a year, reflecting market uncertainty. The S&P 500's decline suggests a cautious environment where investors are reassessing risk amid geopolitical tensions and economic factors. Consider diversifying portfolios to include defensive stocks, which tend to perform better during market downturns and economic uncertainty. The U.S. has deployed 2,200 Marines to the Middle East in response to escalating tensions. The military deployment indicates a significant shift in U.S. foreign policy, which may lead to increased geopolitical uncertainty. Consider diversifying portfolios to include energy stocks, as rising oil prices may benefit companies in this sector. Xcel Energy has initiated power shutoffs in Colorado's Front Range, impacting approximately 18,000 customers due to high winds. The power shutoffs in Colorado highlight the fragility of energy infrastructure, potentially leading to increased operational costs for energy providers. Consider diversifying into energy stocks that may benefit from rising oil prices, especially those with strong balance sheets and dividend yields. Recent data indicates that income disparities among Chinese households are widening, particularly affecting those earning $160,000 or more. The increasing income gap may lead to a decline in consumer spending, as even wealthier households reassess their financial priorities. Consider diversifying your portfolio by investing in companies that cater to essential goods, as these may remain resilient amid reduced high-income spending. The iShares JP Morgan Broad USD Emerging Markets Bond ETF currently offers an appealing yield of 6.37%. BEMBI's strong yield indicates a lucrative opportunity for income-focused investors seeking higher returns in a low-yield environment. Consider allocating a portion of your portfolio to BMB for enhanced yield and diversification in emerging market bonds. The National Stock Exchange of India is scheduled to launch its initial public offering, IPO, in the coming months. The IPO could lead to heightened investor interest in the stock market, potentially increasing liquidity and capital flow into real estate investments. Consider diversifying your portfolio by investing in real estate investment trusts, REITs, that may benefit from increased market activity post-IPO. The National Stock Exchange of India is set to go public on March 13, 2026, marking a significant market event. The upcoming IPO from the National Stock Exchange could revive investor interest in private equity, potentially leading to increased funding opportunities. Consider allocating funds to private equity firms likely to benefit from the upcoming IPO, as it may enhance their growth potential. Ciena Corporation launched innovations to enhance networking capacity, specifically tailored for the increasing demands of AI workloads. The surge in AI workloads is creating a pressing need for advanced networking solutions, indicating strong growth potential for companies in this sector. Consider investing in Ciena Corporation as its innovations position the company favorably in the expanding AI networking market. The crypto market has seen no significant news or developments over the past 5 days, maintaining a status quo. The lack of notable developments in the crypto space reflects investor caution, potentially signaling a bearish sentiment in digital assets. Consider diversifying portfolios by including traditional stocks that show resilience, as crypto may remain stagnant amid market fluctuations. Recent reports indicate that over 60% of offshore wind projects are experiencing significant bureaucratic delays in approvals. The rising bureaucratic hurdles signal potential stagnation in the offshore wind sector, which could lead to reduced investor confidence and funding. Consider diversifying portfolios to include companies that are less reliant on offshore wind projects, mitigating risks from regulatory delays. Thank you for watching FERPA, your financial Sherpa.